I prefer the air drowning it out.
Hey, good afternoon. Thanks so much for joining me. I am Heather Sullivan. I am your host of Sullivan Smart Sense. And, this happens with live broadcasting every now and then. Your guest doesn't quite make it. So we're hoping that he's still going to be able to hop on and join us because he's one of my favorite interviews. He is one of the best credit experts you could meet. So I'm hoping he's going to be able to hop in and join us. But if he's not able to, I'm going to give you as much information as I can to help you boost your credit score, because as you know, every Tuesday we meet here. I'm trying to give you ways to save money or, to beat inflation, do a little better with your money. And of course, one of the biggest things, oh, guess who's here? Guess who's here? All right. Hi there.
Hello there, Heather. How are you?
I'm good. I'm good. Thanks so much for joining me. I really appreciate it. And we're so excited to have you on the show.
You bet. You bet. I am so happy to be here. Good to see you again.
Good to see you too. So everybody, so again, we're going to talk today about how to boost your credit score. So important right now. I was just starting to tell everybody, Carlos, so important right now because we're seeing interest rates go up and up and up. And so if people, are trying to, buy a home, buy a car, do anything like that, your credit is really important right now to try and get the best rates that you can. And so first of all, let me introduce you to everybody. This is Carlos Medina, and he's one of my favorite experts to talk about credit. And he runs ScoreSense right now, but you have a whole extended history and career in credit, and you've learned all the inside secrets about how it works. So I'll let you kind of tell us a little bit more about your background in learning about credit.
Well, I appreciate that introduction. Yes, I've been around the credit industry for over 25 years, and 11 of those with Experian, was one of our three largest credit reporting agencies in the US and actually globally. And with that, I have been able to garner a lot of experience around the credit card industry, the banking industry, and also the credit reporting industry. And I know how important and critical it is to have access to your credit scores and your credit reports and the like. And as you mentioned, while not maybe unprecedented times, these are difficult times. Yeah. And we're about to maybe start entering into some additional of that. So it's even more important to keep track of our credit.
Yeah, absolutely. Well, and I love the way that you break things down and make them like so easy for people to understand, what they need to do and how this stuff really works. Because I think for a lot of people, it's a big mystery, and that's really kind of hurting them because they don't know how to turn the boat around. So first, let's just talk a little bit about, what credit is. First of all, you've got a credit report, and then you've also got scores. So what those are and why they're so important.
Critically important because one, it is your credit score gives you not only access to credit and more credit, but it also gives you better access to credit costs. That is the interest rates that you get. So it's critical. We all need credit at some point in time in our lives, whether it's the purchase of a home, the purchase of an automobile, and even for the basics. So at this stage, it's critical that people understand and monitor their credit scores, and look at credit reports. If you go to scoresense.com, there you'll see a great example of the product and services we provide millions of consumers and have over the years.
Yeah. Okay. So let's dive in. What are some of the biggest mistakes that people make with their credit?
Well, we need to start with what comprises your credit score. What are the critical elements of that credit score? The first one is, like I mentioned, people need to be aware. So there's an awareness factor. You need to constantly be monitoring. Like our health, there is financial health. We monitor, we go see a doctor, we need to go and check our credit to make sure that that health is okay. The second thing is not overextend yourself with credit. And that is people that sometimes I get asked, how many cards should I have? How many loans should I have? And I think that it's obviously a difficult question because it all depends on your circumstances. And for the most part, I always tell people, I said, Go to a good institution that provides you good credit and look to extend your line of credit because that allows you to have more available credit, which is another important factor. So, three or four key things. One is pay your bills on time, is your payment history is most critical. Make sure that you are not over indebted. In other words, the amount of credit line available to you is not extended to the max and you have some available credit. Make sure you don't start opening accounts. For example, if you're looking for a car, go shop around and start asking for car dealers and the like to pull your credit report because you'll see all those inquiries. And as you and I've talked about before, there is a difference between soft inquiries and hard inquiries, but those on the hard inquiry side will affect your credit score.
Yeah, and I was just about to ask you about the difference between the soft and the hard and kind of managing those inquiries.
Yes. So as a consumer, you have, the options as with scoresense.com to go check on your reports and your scores. And that's considered a soft inquiry. You checking on your financial health. So that's okay. Companies that do pre-approvals for credit card offers and the like, soft check your credit to ensure that at least you meet some minimum standards. Other companies will check your credit from a risk perspective and they do so ongoing. That is, those are considered soft checks, and they don't necessarily affect your credit score. The hard check is when you actually, the hard inquiry is when you actually go ask for credit, sign up that application, whether virtually, in person, or otherwise, and you're asking them to go check your credit availability and your credit worthiness. That causes a hard inquiry, and
Okay.
those affect your score. And the
Yeah.
more hard inquiries you have on your and over time, the lesser the score you'll have.
And that's why you want to be, sort of plan when you're going to do applications, plan where you're going to apply. You don't want to just do it willy-nilly because those hard inquiries are hitting your report.
Oh, absolutely. And it's just all about doing your homework, making sure that you are aware of where you stand. Again, monitor it, be aware of your stance.
And to all of our viewers, by the way, out there, if you have questions, just go ahead and type those below. We'd be happy to answer some of your questions. We're here to help you boost that credit score because that will help you in the big picture financially, help you try and get lower rates for loans and things. Sometimes it helps you get jobs. It can really affects your insurance rates, everything. So, so important. Any questions, just go ahead and pop those down there and we'll get them answered. Well, let's dive into utilization rate. So say you've got a few credit cards. What is a utilization rate? Why is it important? And what rate should we be aiming for?
We talked about it briefly, and I'll just give an example and make it simple. Let's say you have three credit cards. That's a lot, but let's say you have three credit cards, and each credit card has a line of credit of $1,000. And at the moment, you have a $2,500 balance across those three credit cards, which represent $3,000 worth of available credit. Now you're utilizing 2,500 of that. That means you're utilizing in excess of 80% of your total available credit. You don't want to be there. It lowers your score. You want to make sure that you stay in that 30% range. You're constantly paying your cards up front. You're constantly trying to keep those balances under check. So a 30% of that ratio is most appropriate.
We just got a good question from Maribel. And she said, did he say that pre-approved credit card info, that's the ones you get in the mail, are those a soft inquiry? Good question. Thanks, Maribel.
That's a great question. And it is common practice for credit card companies, bank credit card issuers to pull soft credit just to score overall for their pre-approvals, what is called pre-approvals. Most of us have seen that on an envelope. You have been pre-approved, which in essence, you have to be careful because at times that doesn't necessarily mean that you have gotten the credit card. So
Right.
you have to make sure. Now, on the other hand, you might apply for a credit card online or otherwise. And at that point, when you are applying for it, that is considered a hard inquiry, which is the difference between the two.
Yeah. Okay. Great question. Thanks very much, Maribel. And okay, so let's go back to talking. We're talking about utilization rate. And then one thing I've read about, a suggestion that's been read about, I wanted to get your thoughts on this, is as a way of either boosting your credit score or lowering your utilization rate, asking your creditors to increase the amount of credit that they offer you. What are your thoughts on that?
I always try to tell consumers overall in the education process is you're better off asking for incremental lines of credit to your bank or your institution, keeping that same credit card, or let's say it's a installment loan and you just want to up that amount available to you or a line of credit, you're better off because now you have an engagement, you have communication with an institution, and that institution is checking you out and making sure that yes, you can absorb more credit within that same vehicle. So I highly recommend that people ask for that additional credit versus going out and getting other credit or other credit cards. Before you know it, you got people opening their wallets with 6, 8, and 10 credit cards. It becomes unmanageable at that point.
Yeah, and that was going to be my next question. How many should a consumer have? What's a good number to have, and what is too many?
That's an interesting. It's just there's no such thing as a rule of thumb there, but I think that my opinion is the lesser the better. So ask for more credit, additional credit. I think that people that have an entertainment travel card or people that have a bank card, one of our big international cards like a Visa or MasterCard, those are good. Those are good payment methods. And having a couple of those is important because you pretty much can't do a whole lot, especially if you're traveling, you're buying airline tickets, you're renting cars. Forget about the cost of car rentals right now, but I just went to Florida and it's outrageous. And and the like, right? So I would say it all depends on your financial health.
Yeah. Yeah. Should you, if you feel like you have too many, or maybe you have some that you're not using, should you cancel it? Or is there like, what's the best way of maybe closing or freezing an account that you're not going to use?
You know, that's a fantastic question. And
That's what I'm here for, the fantastic question.
well, you always do have those. I have to tell you, you're my favorite news reporter. Um, you you're better off. Remember we talked about credit utilization and credit ratios and things like that. So these are you have credit cards that have an available credit limit, and you are utilizing credit, and so therefore that plays with your ratio of utilization. So if you have credit cards in good standing and you want to consolidate or reduce that debt, you're better off paying your card balances, but leaving your cards open because that available credit is still there. So one thing that'll boost immediately is your credit utilization score, which affects positively your overall credit score. Now, I would also recommend that people that have too many consolidate those and watch out because we're about to get into higher interest rates even on credit cards. So it's a good time to start thinking about that and saying, well, maybe I don't need these 3 or 4. I consolidate into one, but keep those open or at least put a freeze on them if you want to through the credit reporting agency or lock them up.
Yeah. I was just about to ask you about that because I love that more cards are letting you do that.
Yes.
Because you can have your credit sitting there and it keeps you safe so that if it's stolen, it's not easily used, and maybe even it keeps you from using it because you remember, oh, that's locked. I'm not going to use that today.
That's right. That's right. It's like if I'm trying to not eat too much ice cream, I don't tend to keep a whole lot of it in my freezer.
Yeah, in the same way. You can't keep it in the house. Well, let's talk a little bit more about consolidating. What are some avenues? You've got personal loans, you've got those zero APR balance transfers. What should people look at doing, to if they are trying to improve their credit score and try and pay down some debt?
I think all of those are great vehicles to reduce that indebtedness and that risk and improve that financial health. So one is there are many cards out there that offer you these zero APR before you move balances to them. Take advantage of those. And some of them are pretty extensive in time frame from a time frame perspective. They also afford you a little bit of a greater amount of open line of credit, especially if you're shifting from one bank to another. That affords you that. There's always the vehicles around personal loans and consolidation loan. There is lines of equity loans, and there's obviously loans you can take against your home equity, for example, to consolidate as well at much lower interest rates. Now, I caveat that based on the current situation we're in with interest rates. But if you have a great interest rate on your home note, maybe there's a good opportunity to put some of those balances that are in the 20% on cards, for example, and above rates on home equity line of credit.
Okay, some good options there. I like that. Um, in recent years, they have started allowing people to report their rent payments or their utility payments. What are your thoughts on these? How much does that help? Is that a good thing to do if you don't have a lot of other, credit cards and things like that you're paying to build your score?
I think they're great vehicles, Heather. You have vehicles like Experience Boost, which allow you to put in there and line it up to your bank account so that the bureau has access to your rent payments, your cable bill payments, and other payments that you're making on time. And those help boost your score. And I'm doing a plug for Experian at this point, but that's a great vehicle. So I would suggest that there's alternative methods of now capturing credit data that are just not your simple stream of that we're used to, which is all about credit cards and loans, et cetera. There are other methods right now, including rent, and there's something called Rent Bureau, which captures your rent. You got to make sure that if you're a renter, go ask your landlord, do you report my rent to the credit reporting agency? If not, work with the credit reporting agency to say, I want to be able to capture that rent payment as you would a mortgage payment as part of my credit history.
Yeah. And make sure you pay it on time.
Well, that would be the good thing to do, right?
Yeah.
But
Go ahead. Go ahead.
no, I think there's a lot of opportunities right now for people to use other means than we were used to improve and get better scores.
Yeah, it really is. I know the bureaus have launched a lot of efforts to be more accessible to help people from all walks of life build their credit. And so I think that's great. Let's talk about what's your advice. So if someone has a score that they need to improve, what would be some of your top suggestions? What are the things that will make the biggest difference in boosting a score?
Well, I think I mentioned that when I talked about, the 3, 4, 5 key elements of what comprises your credit score. And the first one is make sure that you've been paying your bills on time. That's first and foremost. Reduce that equity, that ratio of your indebtedness to your available credit. That's the other one. Make sure that you're setting up a budget in your household and that you're sticking to it. And that includes how much outlay of cash you have available to pay on these credit cards. Because remember, at times people get caught into that minimum payment routine, which doesn't necessarily support the principal, and therefore you're paying on credit cards forever. So that's the other one to make sure you do. And utilization rate is very critical. And don't go out there while you're in this process and open more lines of credit, get more credit cards. It's just more fuel to what could potentially be a pretty bad fire.
Yeah. Yeah. And our audience is growing, by the way. So by the way, to everybody out there watching, we're happy to answer any questions you have. So keep those questions coming. Let's talk a little bit about, because on ScoreSense, and I want you to talk a little bit about ScoreSense and what you guys do. But one of the things that I like that you point out right there on the front page of your website is that you have 3 different scores. They're not the same between the different bureaus. And because these days now we have a lot more access to seeing our score than we ever have before. And so you can, your credit cards or your banks or different financial tools will let you check your score periodically. And I've noticed one uses TransUnion and one uses Experian, and those numbers are different for me. And so talk a little bit about why those are different and why it's important to kind of look at all of those.
Fantastic question, and it gives me an opportunity to talk about ScoreSense, which is something I love. So ScoreSense at scoresense.com is the leading provider of credit information and monitoring services for consumers. And the great advantages is that you are given all three credit scores across all three credit bureaus. You can actually see them side by side. You can see your three credit reports on a side by side basis, besides the fact that you can sign up for monitoring services, and those are provided through either one or the other. Uh, so at that point, one thing that consumers, and going back to your previous questions, and through ScoreSense, you can actually check for inaccuracies in your bureau scores. You can check for inaccuracies in your bureau report themselves. There might be lines of credit that appear on one and don't appear on the other one, or they may be reflecting different balances. A lot of credit reports have errors, and it's important. That's why it's important to monitor them. So beyond getting alerted for fraud and identification services issues that we have, for example, good tools around that. We also have great analytical tools, Heather, that allow you to do what if scenarios. So for example, if you wanted to go in there and try calculating, if I pay this card off and I pay part of this loan off, and you do simulate it, and it'll tell you how much you would actually boost your score by taking those actions. So it allows you to model some behavior that you can actually take action on and improve things from a financial health perspective.
We got a
But
question. Yeah, we got a
go ahead.
question from a viewer. Mary wants to know, is ScoreSense free?
ScoreSense has, as a lot of our subscription-based services, has a free trial period. So you can go try it, sign up for it, check out your scores, your reports, everything else like that. Post that trial period, you can start paying on based on the menu of options you'd like to have, a particular set fee on a monthly basis.
Okay. And I'm going to put the name of it on there again because we got one viewer who was asking. So this is the website, by the way. It's scoresense.com. But let's talk a little bit more about why those three scores are different. Can you give us a little insight, a little secret as to why or how it is that the three bureaus are looking at things differently, that those scores would be different?
Well, interestingly enough, the three bureaus participate jointly through something called Vantage Score, which is the key scoring methodology, which is unlike, for example, FICO and others have a different way of, calculating this. So the difference is coming to what is being captured by each of the bureaus. And all of them should be capturing a similar amount of information and line of information across each consumers. But that's not necessarily true, especially regionally. And so in some cases, you might have a bureau that reflects a bank or a bank account that another one doesn't. So that in itself will present a difference in some score or another. It all should be using the same methodology, Vantage Score, and there is, like anything else, you had a 1.0, a 2.0, et cetera. We should be at a 4.0 Vantage Score, methodology at this state. So we should all assume that every one of them will have the same, but there will be nuances, and that's what you got to check for, because at times, it might be quite different between one bureau and the other. I mean, several points difference.
I have that right now. I have a big spread, but I'm like, hey.
Yes. And so I think you need to call if you call scoresense.com and you contact our toll-free number, we'll provide you direction on how to approach that. This is called the inquiry process. You can contact your credit reporting agency as well, especially if you see the really low one. You want to contact that one first, obviously, and say, how come on 10 points difference or 20 points difference, especially if you're in the middle of trying to do a transaction.
Yeah. I got another great question I'm going to pop up here. Elma, thanks so much for the question. Is it good to pay off the whole balance every month or leave a certain amount in it to increase your credit score?
The rule of thumb for me is that as much as you lower your monthly, at least monthly basis, amount due and total balance, it's better for your score. So if you're the type of person that utilizes whatever card you use, for example, and you charge all month, and then at the end of the month you get your bill, you don't take that minimum payment approach. You just go ahead and pay that balance off. Your score will, through time, reflect a higher and greater change than it is by leaving small amounts in there. What you don't want to do, like as we said before, is pay it off and then close it. You want to continue to carry that balance. I know for a lot of people it's a little bit different because we use credit as a vehicle to kind of supplant or sustain us beyond. But remember, we're doing that beyond our normal cash flow ability, right? So we're extending ourselves. And the more we let that balance go, the lesser the score, but also we're going to be in greater amount of debt.
Elma, thanks so much. Awesome.
That's a great question.
Yeah. Anybody else? Pop them on here. We have a few more minutes with them. Let's talk a little bit about how often should you, right now, while we've been in the pandemic, you can check your scores for free every week if you want to. Normally it's once a year. How often should we check? And we talked about soft inquiries and all that kind of stuff before. Are we hurting our score, when we check it?
We're not going to hurt our score when we check it, especially through subscription-based services, whether you do it through your bank or however you do it. That's not going to affect it at all. I think you should check your score and you should monitor your especially your identity, your social security information, all of those things on a monthly basis. But it's all going to be guided by individual circumstances. So you know that if you've been affected by something and you're in the midst of change financially, that the more often you check it, at least monthly, the better off you are. It's like your health.
Yeah, that's good advice. Okay, so and how do you go about correcting an error? So you're looking at your report, you see something on there, shouldn't be on there. That's a big warning flag, by the way, that you've maybe been hit by identity theft or something. So how do you go about refuting that and getting it off?
Yes, if you're a scoresense.com customer, you contact our toll-free number and speak to one of our representatives. Otherwise, I always tell consumers to contact one of the credit reporting agencies through their websites or their toll-free numbers. They all have inquiry services, and immediately you can put a freeze on your account. If you sense there's some sort of a fraud activity going on, you can contact them and do that. You can do that online. You can do that through mobile applications through their websites, or you can do it by calling a toll-free number. You got to give yourself about 45 days before you get some responses and corrections beyond that. But I think that's a first course of action. And again, if you sense identity or any other kind of fraud activity, shut your account down, close it out, inform. And this applies for anything, whether it's a fraud or identity theft. I think that line of communication with our providers of credit, both the banks and also the credit reporting agencies, is very, very important, especially if we find ourselves in situations that are difficult for repayment of our loans, et cetera. It's that line of communication that sometimes helps us not get into really bad trouble from a credit report and score perspective.
Yeah,
we can work things out.
Yeah, I heard from so many creditors and banks, during the pandemic, they were like, look, if you're struggling, just call us, just talk to us, let us know. I got another great question. Great questions coming from Mary today. She says, so do removing old addresses impact your score? And if so, how?
They don't. They don't impact your score. And I would suggest that everybody, while we monitor, keep harping on that, but we need to keep looking at it because you might have other identifiers on that same address that you don't want to have as part of your report and score. But keeping your addresses updated and all your profile information updated is quite important. People used to be concerned about the fact that if you were applying for credit and you hadn't lived somewhere for X period of time, that's kind of a older school type of model. And right now, what I would simply say is keep your profile current. That includes your address.
Okay, great questions from all of our viewers. Thanks so much to everybody watching. We tested all of your knowledge, so we appreciate it. Thanks so much, Carlos.
Fabulous questions.
And again, the site is scoresense.com if you want to check it out. And this is Carlos Medina with ScoreSense. And again, he also used to work for Experian, has a whole career in credit. So I just love all of your insight. And I really appreciate you sharing all of your knowledge with us. I think it's so important for people to really monitor and do things to improve their credit, because it really can affect so many things in your life. So I really appreciate you sharing all of your knowledge with us today. Thanks, Carlos.
A pleasure as always. Thank you.
All right. And thank you so much for joining us today. We will be back next Tuesday with another hot topic to help you save money and get through inflation and everything else. But thanks so much for being with us today. Anytime you have questions or topics that you want to talk about, just hit me up. Let me know, because I'm always looking for good topics and I want to answer your questions. So just send those notes to me whenever you have a chance, and we will continue to look into things for you. Thanks for being with us, and we'll see you next time.